Welcome to my channel. I'm Ruby Alstrom, and in today's video we will discuss the status of taxable person according to the EU VAT directive. So we can start saying that Article 9 of the main VAT directive describes what is a taxable person. In the second paragraph, it mentions the economic activities. So you can see in the second paragraph how essential is the understanding of what is an economic activity to be able to identify if enterprise qualifies as a taxable person, as it is not sufficient to make supplies or provide service or goods without meeting certain criteria. And there are many criteria, so one of them is the exploitation of tangible and intangible resources. We will see how important is the understanding of this, what means an economic activity, and why to be recognized with the status of taxable person is fundamental, because without this status, a person cannot be granted the right to deduction. So we will see three cases. We will see Inzo against the Belgian authorities. We will see Polysar against the Dutch authorities, and also the Hong Kong Trade Development Council against the Dutch authorities. So, but before going through these three cases, we need to also, one of the cases, in fact, makes, for instance, reference to the fact that several persons can be linked by financial or organizational resources, and therefore be considered as a single taxable person. That's the case indeed. The European VAT directive allows that possibility if they meet the criteria described in Article 11. So yeah, let's analyze the cases. So the first case is Inzo in Belgium. Inzo is a public limited company to whom the Belgian tax authorities is requesting the restitution of the repayment received by Inzo. So what happens is that the tax authorities, in the first assessment, they considered that it was a taxable person, or at least it gave sufficient signs of being of wanting to pursue an economic activity. But on the second assessment, it was considered, the Belgian tax authorities considered that because he did not make any supply, he did not make any transaction, therefore the status of taxable person had to be withdrawn. Inzo challenged that decision. So as we said during the introduction, that the status of taxable person gives rise to right to deduction. Therefore, Inzo was requested the restitution. The court instead decided that even though Inzo did not carry effectively any transaction, so they did not make any supply, the transactions that passively were carried, so when they received the invoices for the commissioned projects, they constitute indeed an economic activity. They were part of the economic activity, and therefore being in place a tangible declaration of wanting to start economic activity, it it grants the status of taxable person. Therefore, in this case, even though, yes, Inzo never made a supply, and they went also into liquidation when Inzo considers that based on the reports of the project that the project will not be profitable. They decided not to pursue and then put into liquidation the company. What was fundamental in this case to not be withdrawn the status of taxable person is that this company gave proof, or at least it supported that they were starting, or that there was intention to begin an economic activity very similar to the case of Romperman, where this was the key element to get the expenses, the input VAT of the expenses deducted. Furthermore, the tax transaction that Inzo will be carried on will be taxable transaction. Therefore, most probably, if the transaction would have been exempted, VAT exempted, or no taxable transaction, most probably the decision would have been different. And linked to the topic of having a taxable transaction or a non-taxable transaction because free of charge, we have the case of the Hong Kong Trade Development Council. This is an organization that provided services of information services for free to traders. They were based mainly in the trade centers because they wanted to promote the business between Hong Kong and Europe and vice versa. So they supported both sides for free. So there was the main element here missing was a quid pro quo, that it was necessary to consider in place an economic activity. So this organization received repayments, and then on the second assessment it was decided that they were not, they should not be considered as a taxable person, and therefore they should restitute the repayments. So the questions posed to the judge were whether a person that carries on a habitually or continuously basis services free of charge, if that person can be considered a taxable person, and if considered a taxable person, if that person can deduct its input tax, even though the services provided were free of charge. So it means non-taxable transactions. So that was the second question. So it could be said or supported that the supply of services free of charge, it's a wider interpretation of Article 14, where it's so in an interpretation where also free of charge are supply of services, then makes this supply taxable transactions, then you carry on economic activity. And consequently, not having an impact, this characteristic of being free of charge on the meaning of economic activity, then yes, you could claim that your status of taxable person cannot be challenged or cannot be withdrawn. So, however, even though the pursuit of profit is not a characteristic of an economic activity per se, what was missing in this case was the condition of quid pro quo. We offer this service, but we also receive the payment, disregarding the value or the amount of the payment. So because this aspect was missing, it could not be said that they were carrying an economic activity, and therefore they were not given the status of taxable person. Being absent this element, the quid pro quo element, this makes kind of automatically the transaction to be out of the VAT scope and therefore not regulated by VAT. If the transaction is out of the scope of VAT and this is the only activity performed by the person, then this person cannot be given the status of taxable person. So the court assimilated this organization to a final consumer, to a natural person, and that they decides to offer their services habitually and free of charge, but not a taxable person, which is a similar thing that any of us could do to give, like what I'm doing now, offering for free my videos. So back to the topic, once the status of taxable person was denied to this organization, they had to give back the repayments received. Practically what the court decided was just described in Article 168. So the last case is Polysar BV, which is a Dutch company, so it's based in the Netherlands. Polysar Investments is a Dutch holding company whose only activity is the acquisition of financial holdings. It is not involved in the management of its undertakings. So Polysar BV is invoiced by the parent company, the Canadian Polysar Holding Ltd, for the services rendered to the former. Polysar BV obtains a refund or the repayment of this VAT charge on those invoices. So again, in this case, the Polysar BV received the repayment from tax authorities. Later on, tax authorities challenges the status of taxable person and therefore is requesting the to Polysar to pay back, essentially. What the court decided was indeed that this economic activity was not an economic activity because the mere activity of Polysar BV was to buy shares, keep them, and this could not be considered an economic activity as they only obtain the yielding from these shares, but it was not an economic activity. They were not buying and selling these shares. Therefore, this could not be an economic activity. Consequently, they were withdrawn this status of taxable person. So additionally, in this case, we have there is this other taxable person to whom Polysar BV is linked to, because the Canadian, the parent company, owns 100% of the shares of this Dutch company. Therefore, somehow you could say, yeah, but they are part of this taxable person and therefore they could join, they could be considered as a taxable person because of the parent company. Instead, in this case, if you read Article 168 of the main VAT directive, it doesn't meet the conditions because, as we said, this is based in Canada and the only way to obtain, to recognize many persons as a single taxable person is that these persons are located in the same member state. Therefore, in this case, Article 11 is clearly not met and Polysar BV had to return the repayments to the tax authorities. These are cases that are discussed much larger because many other criteria are involved and discussed. But if we focus on as this topic is based on the status of taxable person, and is essentially the topic of these three cases, I did not discuss about all the other criteria that were mentioned, but they were not essential part of these cases, I would say. Like for instance, in this case, also in the case of Polysar, it was mentioned the fact that there was no management of the other activities. Yeah, so Polysar BV had no other activity. The only activity that they did was not considered an economic activity. If they would have been involved in the management of their undertakings, which means they will be doing the activity of their undertakings, then in that case, you can say, yes, they were carrying an economic activity. In this case, it did not happen. Polysar only received the dividends that were maturing from their shares, but other than that, they did not do they did not carry on actual economic activities. So that's the reason. Yeah, another factor you can consider. The next video will be focused on taxable transaction, and we will the characteristics. Some of them already introduced in this video. So this is all for now. I wish you good holidays, and we'll be back with another video. I don't know yet when, but definitely that will be the next topic. Bye.